Hey, well, good evening, everybody, and thank you all for being here. If you're watching this live on Zoom, thank you all for taking the time tonight. If you're watching this on YouTube later, thank you for finding the video. Last October, I did my very first Zoom class called Intro to Real Estate Investing. It was very basic, and we just covered really the reasons why somebody should think about investing into more real estate. Obviously, the wealth building potential of that is one of the biggest reasons. But tonight, we want to take that a huge step forward and get a little bit more practical. Because I have a lot of people that say, Donald, yeah, I get why I should invest in your real estate. I get how it can build wealth, but how do you actually do it? Where do I find the money for this? Where do I find these properties? And once I've found the property, how do I know what to even do with it or what to pay for it? So that's exactly what we're going to talk about tonight. And I have, in my opinion, the best person ever to possibly talk about this. Elizabeth Greever is one of our personal friends for a long time. She's been one of our clients for the last 10 years, and she's an investor herself, probably the best one I've ever worked with. And the best part is she's a school teacher who knows how to teach this stuff as well to make people like me understand this. So she's very practical, very detailed, very thorough. That's probably why I get along with her so well. And she's the best possible person to teach about this. So before I turn it over to you, Elizabeth, if you guys have any questions while she's going through this, Vanith is watching the chat. Go ahead and drop in any questions you have to the chat. We'll ask Elizabeth those questions afterwards. But for now, I'm going to turn it over to you, Elizabeth. First, thank you again for doing this tonight. I know you're very busy, but you're a blessing to us in our business. So thank you, and I'll let you take it from here. And remember, you're on mute.
Awesome. Thank you so much, Donald. I love you and Zan so much, and I'm so grateful for y'all. I'm glad to know you professionally and personally. So thank you for the opportunity to speak to your clients who I know you cherish so, so deeply. And I'm honored to be one of them. So thank you for that. Thank you for this. I think real estate investing is so powerful and so beautiful. Obviously, it's what I do. It's my all day, every day. But it's also confusing and scary and overwhelming. And, so my hope is that in, this kind of quick overview today, it can start to turn people's minds on to what's possible, what information do they need to have, how can they get that, and be able to take those steps forward so that they can start investing too. So yes, like Donald said, please put any questions in the chat. I'd be happy to answer them for you. I want to support you guys as you are exploring real estate investing. So let's get started. First things first, anytime I ever talk to somebody about getting involved in real estate investing, the first thing I say to them is you've got to figure out where your money is coming from. And there's a number of reasons for this. One, when a true deal comes to the table, you got to move quick. Any deal that's a good deal is not sitting on the market for 30 days for you to think about. You've really got to be able to have everything together and be able to move forward quickly. And a lot of times when you're investing, you're purchasing properties that need work. And so you're also going to need the funds that are going to support that kind of purchase. That doesn't always mean you're purchasing a property that needs work. Sometimes people turn new builds into investments, but you just need to be prepared for that. And then you also need to know where your money is coming from, because you need to know how much your money is going to cost you. So if you are borrowing against a HELOC, or if you're getting a hard money loan, which is basically the term for really expensive money, but they'll lend you on these unique kind of investment properties. Maybe you're using your own cash. All of these things matter when we dive into the calculator here in a few minutes. And it's going to be a piece of information that you need to make sure you've got settled so that when you're running numbers on this, you do it well and you do it thoroughly and you have all of the information first. So where do you get your money from? Well, I have no idea. Where do I start? Well, first you start with Donald. Hey, Donald, do you know any mortgage brokers that will lend on real estate investment properties? And get introduced to those people. Talk to them about their products and what's available to you and see if that works for you. Also, one of my favorite questions or question starters is, do you know anybody who? Right? So do you know anybody who might be interested in investing in real estate? There are a lot of people out there with money that they want to invest, but they don't want to do the work that it takes to be a real estate investor. And so if you're willing to do the work, maybe that person's willing to do the bank, to be the bank. So this literally could be a family member. It could be somebody you know from the community. It could be anybody anywhere. So instead of saying, hey, Donald, do you want to lend me some money so that I can buy my first real estate investment property? You say, hey, Donald, do you know anybody who may want to invest in real estate and may be interested in being the bank? And then you start that discussion and do those introductions and then talk about all of the terms and details. Now, I will say that when you're borrowing from anybody, make sure that you have it properly docked up and that you have a promissory note in place. Don't just borrow from your uncle and say, I'll pay you back eventually. Make sure that you've got it set up properly so that you're paying that mortgage every single month or you're paying that loan back or whatever it looks like, and you know what those terms are and you know how that's going to go. So start with, where's that money coming from? Then you're going to pick the geographic area. So it's very easy to get overwhelmed by this. It's also very easy to say, well, I would buy real estate anywhere, or I would buy anywhere in Texas, or I would even buy anywhere in Houston. Well, Houston is a grand, huge, wonderful place. There are so many neighborhoods and so many things happening in Houston, and it takes a very long time to get from one side of the city to the other, especially when you're talking suburbs. My recommendation, especially when you're first getting started, is to pick locations that are within 30 minutes of where you live. I think it's really easy to be like, oh, I should invest in Denver where people are going to go skiing, or I should go invest, along the Gulf where people are going to the beach. Those are great. There's nothing wrong with that. You absolutely can do those things. But if you want to get your feet wet and get started in real estate investing, start somewhere where you literally can touch the house. Start somewhere where you can go drive by it at any time. Start somewhere when you say, hey, Donald, this looks like a good possible deal. You guys can go and walk that property and start this process. So choose a geographic area that's within 30 minutes of you and just pick a few zip codes. And this is where you sit down with Donald and say, all right, Donald, let's look at these 4 or 5 zip codes and see, what is the school district? What schools in that district do those houses feed to? What are the property taxes here? What are the mud taxes here? What are the houses going for? Is it a more of a rental neighborhood? What is going on? And start digging into maybe 3 to 5 zip codes, and then narrow those down. Narrow those down to, all right, this is a really good school district. I really like the schools that this feeds into. And I think I want to start here in my search for a rental property. So start digging in and getting that information and narrowing your search down and really being particular about it, and not just saying, oh, I'm going to buy anywhere in the Woodlands, or I'm going to buy anywhere in Houston. Well, those are really huge areas. I really would encourage you to get specific and use Donald as a resource to really help you figure out what's going on in those neighborhoods and determine which ones might be good for you. Because then the next thing is, what's your price range? So we started with, where is your money coming from? Well, that's also going to tell you how much are you willing to spend on a house, which is going to be one of those things that you are going to be narrowing down when you're talking about these neighborhoods with Donald. And so, not that long ago, investors used to say, well, I want to be able to purchase a property and then rent it for 1% of that purchase price. So just for an easy example, I want to be able to buy or be all in the purchase of the property at $150,000. So that means I need to rent it for $1,500. Well, that's lovely and wonderful, but it's really not easy to have that anymore. With the rise of the costs of property taxes and insurance and just houses in general, the rents haven't quite caught up with all of that and matched all of that. And so it's not as easy to find that. So you can't just make that snap, oh, well, if it's not 1%, then I'm not going to make it work. Well, then you're going to have a really hard time finding a rental property. You got to move past that. And again, we'll talk about the calculator and work through some of these things that are important to look at so that you've got those tools to evaluate these properties. But that price range is going to help you narrow these down. And so then you set up a search with Donald and you're like, okay, I like these 3 zip codes, or I like these 3 neighborhoods. I have a search with Donald for a very specific neighborhood. There's like 10 streets in this neighborhood, but I love it. I want a house there. And I get emails because I told him this is where I want to buy. Right. And so you really, truly can get that specific, but set those searches up with Donald and talk to him about, especially now with days on market being longer, sellers might be more inclined to make deals on their properties, right? And take a price cut potentially, right? And so you want to not just set up like, oh, hey, this house just got listed, but then also what about houses in that same zip code that have been sitting for 30, 45, 60 days? Maybe people might be willing to start having a conversation. And again, that's where Donald comes in. He can pick up the phone and call the realtor and say, hey, tell me what's going on with this house. And you guys can decide, oh, is this like a hot one that we should keep our eyes on? Or, oh, maybe this, we just need to kind of move on. So set up those searches so you're not getting overwhelmed and you're just getting on HAR or Redfin or Zillow or wherever you go and look at properties and just saying, oh, I want a property in Houston that's a 3-bed, 2-bath. You're going to be evaluating houses for days, and it's not going to be worth your time. So I would encourage you to take those steps first, so that then when you and Donald are going and walking these houses that you're like, oh, that could be a good one. Oh, I like that area. Oh, I like that price point. Oh, this seems like it's worth my time to evaluate. Now you've got everything, kind of set up and you're focused on, all right, let's go look at this one house. So here's where I'm going to share my screen and show you our calculator. So I am, as Donald said, I used to be a teacher. I was a math teacher. And so I very much so, think that it's important to run your numbers and run them well and be really thorough about it. And so it's very easy when you're purchasing properties for it to be emotional, especially when you really want to buy an investment property. You're like, oh man, I really want to make this work. And I feel you. I have looked at houses and then turned to my husband and been like, I really want to make this work. And he's like, the calculator doesn't work. Like if the calculator doesn't say the deal's going to work, we can't do it. So having a calculator is really important. So I'm going to show you mine, and I'm going to spend this next little time walking through it with you so that you can see what I do. Okay. Every real estate investor looks at things differently. Where you're coming from financially is going to be different. The things that are important to you about a house are different. Your cost of money is going to be different. There's going to be all of these different factors that play into, how you evaluate deals and what numbers are important to you. So I'm going to show you what I've built out over these years, and then we can go from there. I just want to confirm, is my screen sharing my calculator?
Yeah, we can see it.
Okay, it's just not
It just went away now, but
all right, hold on. I'm sorry, I just want to make sure, because usually I get like a blue box around it and I didn't get a blue box. So I just want to make sure you're good. So all right,
yeah.
If you can't see it, let me know. But all right, so I'm going to walk you through my calculator. So we've been doing this for almost 10 years, and this calculator has been built out over time. And truly it's come from, oh, I forgot to factor in that amount of money, or I forgot that I have to pay for utilities while I'm fixing this house up, or, things like that, expenses like that have come into play. And we're like, we need to make sure this gets to the calculator. So this is like my source of truth. For you, you might have things on it that are completely different. And that's totally okay. When you create yours, you can, figure out what numbers are important to you and what are not. So I'm going to walk you through this. And again, if you guys have any questions, you're welcome to add them to the chat and we'll talk about them at the end. So I'm going to start by saying everything in green is what gets edited. Every other cell that's just white has some sort of calculation inside of it, and I don't have to do anything. So, or it talks to another cell. So I just want to let you know that I start with the green. So when I am evaluating a deal, this is a Google sheet. So I will quite literally make a copy of this sheet, put the address as the name of it so that I know which house I'm evaluating and I can keep up with it. I can go back and look at it, all that kind of stuff. So with that being said, I also include the property address. So B5 is where I would put the property address of the house that we're looking at. So maybe you and Donald are talking about 2 or 3 houses. Well, I would make copies of 2 or 3 calculators so that you really are able to make edits and make changes, all that kind of stuff, and keep track of it all. So property address is first. So project months for us, when we purchase properties, we are purchasing houses that need work. That is just our investment strategy. It's what works for us. And so we are going to be renovating to some extent before the house is in service, meaning before I am making money on that home. And so if I'm flipping it, then I'm considering, okay, how many months is it going to take that project to, the actual construction to happen? And then I recommend that you add maybe 1 or 2 months to that projected project timeline, because they always go over. And then you've got the days on market. So now I'm going to call Donald and say, all right, Donald, this beautiful house is done. We need to take photos, and then we're going to list it on the market. And he's like, great. All right, Greever. Well, that sounds good. But the days on market in this neighborhood are 45 days. So that means it's going to take 45 days to get the house under contract, and then however long it's going to be from there to close. So I need to factor in at minimum 2.5 months, but I would go probably 3 or 4 months. So now we're talking, let's just say the project's 3 months, then I'm going to add a buffer of 1. So there's 4 months. And then days on market's 1.5 months with maybe a 30-day close. So I'm going to buffer myself and say 8 total months. Okay, so I'm going to change this 10 to an 8. So now my project months from when I purchased the house to when it is in service. So I sell it, or it's got a tenant in it, whatever that means for I'm making money on this home. That amount of time is 8 months that I'm holding the house and I'm spending money and I'm not making money, right? So that's what that project months is. Okay, then line B7 is ARV. So in the investor world, that's called after repair value. So what that means is this is what the house is worth when you have completely fixed it up, and now this is what you could expect it to appraise for. Where do you get that number? Donald. So you're going to pull comps in the neighborhood, Donald will, and say, okay, what is this house worth once I put a new roof on it, once I upgrade the kitchen, change the floors, paint it, whatever it is that the house needs and what the neighborhood calls for. That's what you're going to use to determine a starting point for what renovations you're going to be doing. And so then what is it worth when it's fixed up? And this ARV number is important whether you're selling the house or you're holding the house for a short or long-term rental. The reason why is because if I say, all right, Donald, I'm done with my project. I want to list this house and we're going to sell it. Well, guess what? First of all, I should expect that when he sends me his email with his very detailed, this is what the neighborhood looks like and this is my recommended list price, his recommended list price better be what that ARV is. So we want to get that right on the front end so that on the back end, the worst thing that can happen is it goes up, right? We don't want it to go down. We can't control everything, right? That's why we build these calculators and evaluate these numbers and make sure we're comfortable with fluctuations, which we will talk about. But we want to be as close as possible. The other reason why this is important is because when that house gets under contract and we have a buyer, they are likely going to use a loan, which means that they're going to need to get an appraisal. So that appraisal should also be at or better than this ARV number. But then if I'm going to hold the property and keep it as a shorter long-term rental, maybe I want to refinance out of the hard money loan that I borrowed. Or maybe I want to refinance out of the loan with my uncle. Or maybe I want to refinance and get my cash back so I can go do this again. And so when I'm refinancing the house, I'm also going to get an appraisal. And so I would expect, again, for that appraisal to come in at this amount of $325 for this sample example, or better. Because mortgage companies that do refinances like this are going to use that number to base how much money they're willing to actually loan you. Because on a refinance for a rental property, they're not going to refinance the full value. They're only going to refinance 70 to 80% of the value, depending on the factors of that said mortgage company. And so this is really, really important that you get this ARV number right. And again, Donald is an expert. I know you all know that. You are all his clients. You have seen his emails and his detailed analysis of what the house should be worth and what it should sell for, what it's worth fixed up, what it should appraise for. So it's really, really important to get this number right from the get-go. Now, I am going to skip B9, the purchase price, because this is the last number I manipulate after I'm done working through my sheet. Okay, so we're going to skip B9 and come back to it. And I'm going to go to B10. All right. So you go walk this house with Donald. It needs a full renovation and it's time to get those renovation estimates. So you want to make sure that when the contractor comes out to the house, you've got a list of everything that you want them to do. And let's just say they give you an estimate of $60,000. Okay, that's wonderful. But just like days on market, you are going to want to give yourself a buffer. Okay. One time we flipped a house, and it was actually a newer house, but it had tenants that lived in it, and they destroyed a lot of things, and the seller was just ready to let it go. And so we purchased the house, and they had wood floors on the main level, but then there was tile in the kitchen and carpet in the primary bedrooms. And so the house was new enough, we were able to source those wood floors. So the plan was we were going to take out the tile in the kitchen, take out the carpet in the primary bedroom, and have the entire first floor be these wood floors that were original to the house. So we're going through doing the rest of the renovation. The floors finally come in. It's like the last thing we have to do before our punch list. And it is the wrong color brown. And so we had a choice to make. Are we going to wait another 6 to 8 weeks for the correct floors to arrive? Or are we going to completely remove all of the floors and start from fresh with some that we can get in a day or two? And so we ended up evaluating, my dad always told me to gather all the facts and then make a decision. And so we talked to the supplier about, when we could get these matching floors to come in. And then we also looked at other prospective floors, and we ended up making a decision that cost us $15,000 because we completely replaced all of the floors on that first floor of this gorgeous house. But what happened was that it really elevated the house, and we were very lucky, and we got a beautiful offer on the house that was even more than what we had anticipated listing it for. And so it was a total blessing that we did this. But being able to make that $15,000 choice in the middle of our flip was because we left ourselves a buffer. Okay. If we hadn't done that, we would have been stuck. And we really wanted to time this listing properly and get the house going. And so we were able to do that. Now, does every decision like that lead to you making more money or at least making up that money on the sale? No, it doesn't. That was a very beautiful scenario that worked out for us. But the point is, we had the space to do it. Okay. So when you get a rehab budget from a contractor at $60,000, that is lovely and wonderful. You need to add at least 20% to that, like at minimum. Okay. Because things are going to happen. Stuff isn't going to be in stock. You're going to order something that's going to come and it's going to be wrong. You're going to have to order. All kinds of things can happen. Okay. So give yourself a buffer. All right. Then closing costs are factored in here. So when we make offers on properties, I offer to pay the closing costs for the buyer and the seller. You might not do that. And if you find a property on the MLS with Donald, you're probably going to be in the scenario where it would be expected that the seller is going to pay their own, owner's title policy and then all the fees that the title company charges. So you could change this calculation for you and your scenario. But for me, I need to factor in both sides of the closing costs. Then there's in B12, we're at the holding costs. So I'm going to jump to the column H here on this calculator. These are the things, most of the things that make up holding costs. Okay. So while you're holding the house for 8 months, you're going to have to pay for electric, gas, water. When you purchase the property, do you need to have legal paperwork drawn up? Are you creating an LLC? Do you need somebody to draw up the loan documents for the loan that you're getting? Like, what is it that you have to pay for? Are you paying for a survey? Are you paying, like for me, sometimes a realtor will bring me a deal and I'm paying them a fee that like I'm paying them their commission, but it's not coming out of the seller's side. I'm paying it, right? So I need to factor that in so that I'm making sure that the realtor is getting paid. What are the property taxes? Remember, you're not going to have exemptions. And so what are the true property taxes for the year for that property? If I'm going to hold it for 8 months, that's a majority of a year of property taxes I'm going to owe that I'm not going to have money coming in to cover them. Same with the HOA and then the property insurance. Are you getting a builder's risk policy because you're doing the renovation? And then if you hold it, you need, insurance like for a rental property. If you're just going to flip it, builder's risk should be good. We also, just as a business, choose to get flood insurance. That's our choice. We started right when Harvey happened. And so I have a little bit of some, I saw a lot of people that had never flooded and never had flood insurance, and they lost everything. And so maybe there's a little bit of trauma there for me, but for us, it helps me sleep at night. You might not choose to do that. So, you got to think about, what is that insurance cost going to be? So all of these green lines or green cells in H get edited based on, some of it is assumptions. So again, with electric, I don't know if I'm going to spend $1,000, but I'm going to maybe guess, depending on what time of year it is, how much do I spend at my house? Is this house bigger or smaller? Give yourself a buffer. And then it prorates it. So this is how much does it cost, or how much will it cost based on how long I'm holding it. So if you look up here in where the actual formula is, you'll see that it's multiplied by B6, right? So the projected property taxes in H11, 5267 projected for the year, divided by 12 is however many per month. But then I times it by the number of months I'm going to hold it, because again, this is my holding cost. So when this B6 changes, this H11 changes. And so the same thing goes for the HOA and the insurance. The other, so this $6,594, the H17, factors into this B12. Okay, but the other thing that factors into this B12 is all of this hard money interest and stuff. So if you're going to have any kind of loan on the money that you are using to purchase these properties, you need to make sure that these cells say what those numbers are for you. So I know that this Excel sheet is not perfect. It's a little jumpy, but it works for me, so bear with me. So here in E6, where it says hard money or HML, hard money loan interest rate, so that's based on how much interest am I paying on this hard money? Is it 10%? Is it 12%? Is it 8%? Is it 15%? What is it? And I need to factor that in and type it in here into E6. And then all of the numbers will work together to say, okay, how much interest am I going to owe every month? And so that's in B16. And then how much interest am I going to owe total? Again, based on B6, my projected project months. Okay. So with hard money or any other loans, you might have additional fees or closing costs that they charge, or administrative costs, things like that. You need to make sure you factor all of that in here, so that when all of this comes together, your holding costs in B12 are pretty dang accurate. Okay. So when we're talking about a flip exit, we want to say we're talking about, we're going to sell this house. We're going to buy it, fix it up, and sell it. And the thing that I always talk to Donald about and always say to everybody is, you should have 2 exit strategies. You should have 2. So when you're purchasing a property, if you want to keep it for a rental, that's wonderful. Evaluate it for a rental, make sure it works, but also evaluate it for a sale, just in case. What if something happens and the market turns? Or what if something happens with you personally and you need to get rid of that property? You have to make sure that you've got options for you. It's not an investment if you're just losing everything on it. I'm not saying you're going to win every single time, but you've got to protect yourself as best you can. So if I'm always looking at, okay, if I need to sell this house, what can I sell it for? So I almost am always looking at, does the flip exit work? Okay, so here in E9 is the selling price. Now you'll notice that this 325 in this example is the same as the ARV that Donald helped me figure out when he pulled comps for me and we did a detailed analysis on this property and what it should be worth. So the selling price is 325 in this example. Then I am hiring Donald to list this property for me, and then somebody is going to be representing the buyer. And so I'm expecting to pay that full 6%. I'm certainly going to run it into my numbers. Maybe that can be negotiated later, but I am definitely going to factor that in. And then again, with closing costs. So I like to be conservative. So I've got my closing costs calculated here. Then with some properties, we do stage. I believe in staging wholeheartedly. I believe that it evokes a tremendous amount of emotion in people. And not only do I believe that because I've seen our houses do really well when we sell them in their stage, but my own husband has walked into flip houses and he has been like, oh man, can we keep this house, while he's sitting lounging on the chair that the stagers just brought in? And I'm like, no, get out of here. We got to sell this thing, right? So staging really does evoke emotion. Even when you're the one that's supposed to be, I'm here to sell this house and get out of here. It really does work. So for some of our flip houses, when we consider staging, I obviously have to factor that cost in. So in this example, it's not there, but let's just say that I was like, no, I'm definitely going to stage this house. All right, so I'm going to say that it's $5,500 to stage it. I know Donald's got some amazing stagers that he loves. He can recommend to you. They could totally give you a price so that you can make sure that you have that number pretty close to right. Always give yourself a buffer while you're evaluating these deals. So now here we are in E13 with total project costs. So I've bought the house, I've paid for the closing costs, I've done the reno, I've buffered my reno, I've gotten all the utilities, the insurance, the paperwork, my hard money loan. Everything is factored into this house. So my total project cost for this example is $146,328. Okay. So now the fun square, E14, your projected profit. So if I'm going to sell this house, this is where I start to evaluate what can I do that makes sense. So I promised you we were going to go back to B9. This is when we start playing with B9. The house is going to have to be real bad for me to buy a house worth $325 for $50,000. And my reno is for sure going to be more than 80. Okay. So like, obviously I just use it. I keep that number low when I'm playing with these numbers so that then I can come back to it and say, all right, what do we got going on here? So let's just say for this example, the seller wants 200,000. Make sure I typed that right. Okay. So if the seller wants 200,000 based on all of the numbers that I just put in, you'll see in E14, I lose $16,000. I don't have to ask you guys to know that like that's not a deal. Okay. So and this is where it can be confusing sometimes for people when they're like, well, the house is going to be worth so much when it's fixed up. You're like, yes, but there are so many things that go into the actual fixing up. And it's not even just the renovation that you got to make sure you're taking into consideration. Okay. So let's play with 175 just so you can start to kind of see what this is going to look like. So now, all right, I'm making a little bit of profit. $11,000 is not anything to like slough off, but in my opinion, it's not enough when you're taking on this kind of risk. $11,000 is the seller saying, I need a new AC. If you're lucky. $11,000 is the seller saying, or the buyer saying, I need a new roof. Maybe. I mean, I don't know. It might, roofs these days are even more than that, right? So like, that's like one inspection contingency or, one thing could suck up that $11,000. So I don't recommend that. You might be cool with it. You might say, you know what? I'm good. I'm good with where this money is coming from. It's my own cash. I'm not worried about paying anybody back. And, I feel really good about all these numbers that we've done. I'm cool with just getting one under my belt at $11,000. You are the only person that can make that decision. You and whoever else it is in your home that's responsible financially for your dollars. Nobody can make that decision for you. I'm just going to say it would not be one that I would choose. Okay, so now let's just play with like 160. All right, $27,000. That's pretty good, right? So like to me, I'm a little more comfortable with that. So even if it is one inspection contingency and the buyer's like, hey, can you put on a new roof? If we get to a point where like that's the decision that I need to make, I can put on a roof and still walk away with a little bit of money and be okay with it. Okay, so like once you get to this part, you truly are the only person that can decide what is your projected profit number that makes sense for you. And when, like, let's just say 27,000 isn't enough. Okay, well, let's go to 145 and see what that looks like. $43,000. It's pretty good, right? So like, you start to play with that and you can play with this purchase price in B9 and see what the projected profit is and decide what you're comfortable with. Decide what your risk tolerance is. And obviously not a reseller is going to accept that. The seller might not accept 145. Okay, I totally understand. Guess what? Hi, thanks. It was so nice to meet you. Thanks for letting me make an offer on your house, right? You move on. And you tell Donald, keep those houses coming because this one isn't going to work, right? So we've talked about a flip exit. Let's talk about a rental exit. So there's long-term rentals. So a tenant moves in, they live there for a year or 10 years or whatever, right? But they're living there long-term. You're not furnishing the property. You're not really providing anything for them. They're paying for their own utilities, all that kind of stuff. And then you also have short-term rentals. So Airbnbs, VRBOs. So you're furnishing it. You're providing the paper goods, the soaps, the coffee, all of that kind of stuff. Much, much, much more involved. But both are really good options. And so again, this is where you're going to go back to Donald and say, all right, Donald, we found this potential house. You told me I need to have two exit strategies. We've evaluated the flip one. Let's look at the rental one. All right. So using the same numbers that we used up here in this flip exit, you're going to say, all right, so my total project costs from B13, right? Everything that it costs me to do this property is $249. So let's just round it up to $250,000, right? That's my total all in for this house. So on this same Google sheet, I have an amortization schedule. So you'll see a separate tab down here at the bottom. It says amortization schedule. So I'm going to type in $250,000. And since I've already talked to Donald's recommended mortgage person that's going to help me hold this property, or I've already spoken to my uncle and I know how much he's willing to lend me and at what interest rate he's willing to do that. So let's just say we're at 8%. Investor interest rates are higher than normal live-in buyer interest rates. So just know that going in. And so then it does the math for me. So my monthly payment, just principal and interest, is $1,834.41. So that's here in D5, this blue cell. So if I come back over here to the flip calculator, you'll see in B21 that same $1,834.41 is there, right? So that's why that box is white, because it's getting a calculation from the other sheet. Then prorated property taxes, HOA, and insurance are all coming from H11, 12, and 13. Okay, so I got to make sure that those numbers are factoring everything in so that down here under my rental exit, these prorated property taxes, HOA, and insurance are all correct. Okay, so then my PITI, principal, interest, taxes, insurance, is going to be $2,439, right? $2,439.99. Okay, fine. So that's going to be my monthly nut I have to crack, right? I have to clear that every single month. So then I'm going to come over here to E21. So this is the next green thing I got to insert. And I'm going to go to Donald and say, all right, Donald, we're going to make this house beautiful. We've already talked about what the reno is going to be and looked through all those numbers. What can I rent this house for? What is a reasonable amount that I should be able to list this house on the MLS, and we're going to get somebody to rent it within a few weeks for this price? And he's like, all right, Greever, well, I hear all my comps. I think we're looking at about $2,200 for as nice as you're going to make that house and as good as all the updates are. I think our rental rate is going to be $2,200. Okay, great. So I'm going to insert $2,200 here into E21. And then it's already populating my PITI from B25. And then I like to consider maintenance reserves. So you might decide that you need a different amount of money every month that you want to hold back for maintenance. For me, I just did 1% of the mortgage. It could be more than that. I probably will definitely not go less than that. But for this example, that's where we're at. So my projected cash flow is negative $423. Now, for me, that is not a deal. There are people in this world who need the loss, right? I am not a CPA. I cannot speak to you about how that's going to reflect on your tax returns. However, I know that there are a lot of investors that they're cool with it, right? They're okay with the loss. They need the loss. They're after the equity capture of the house. They're after their bigger vision of their portfolio, their net worth. There are so many layers that go into this, right? And so they're okay with that. I also know investors that if this projected cash flow was zero, they'd be like, cool, I'm good with it. That sounds good to me. If I can break even, I'm comfortable breaking even. Again, back to that projected profit number, this is where you make that decision about what risk you are or are not willing to take. All I will say is that if the projected cash flow is 0 or negative, where's the money coming from when the AC breaks? Where's the money coming from when you have a hole in the roof? Where's the money coming from when the pipes burst? So I'm just throwing out scenarios. I'm not saying insurance wouldn't be involved in some of those things and stuff like that, but just make sure that you're comfortable that, like, hey, okay, I've got money over here if I need an emergency. Um, it's I just want to stress that, like, I want real estate investing to be good for people. And again, I'm not saying you're not going to make a mistake or you're not going to get into a tough spot or anything like that. Like, this is not a foolproof way to invest your money. But you know, if you can do as much due diligence as possible, you're going to be in the best spot you can be in. Okay, so for a rental exit, long-term wise, this is not, in my opinion, a good option. So then you've got the short-term rental calculation. So this is a lot more complicated to get to the right numbers here. Okay, and so when you're talking about average daily rate, so here I am in H21, I'm pulling that number, and I've got all kinds of resources about this, but I honestly, you could get on Airbnb or VRBO and look at other properties in the same neighborhood that are the same size and see what they're renting for. And yes, you're going to have to, like, write down your numbers and do some math and whatever, but you can figure out what the average daily rate is from all of that. So, you know, on the weekends, a lot of times it's more expensive to rent than on the weekdays. That's fine. We're just talking about an average here because we're trying to get to a good number. So then for me in H22, this 6 in regards to guest count does not calculate anywhere. It just helps me keep up with it, because if I can host 6 guests, well, my average daily rate's 150, again, just for this example. Well, if I can host 10 guests, maybe my average daily rate's 200, right? So I just like to keep up with what number, like how many people are gonna stay in that house based on that average daily rate. And then we're talking about occupancy. So in H23 and 24, we're talking about 40% occupancy is kind of my worst case scenario, and 60% occupancy is my best case scenario. Yes, I want my occupancy way higher than 60%. But I also know, especially when you're first starting out, you are not going to be fully booked. It takes time to build that momentum. And it also takes time for you to learn the algorithm and how to be a good host and all of these other complicated things, right? And so I like to be conservative. And so this 40% and 60% occupancy is literally based on nights, like how many nights of the month that it's booked. So it's automatically doing that calculation using this H21 average daily rate of $150. I have the same maintenance reserves, right? Same house, same mortgage, same all the things. And then consumables. So we're talking toilet paper, paper towels, coffee, soaps, all kinds of things. You can get on Amazon and see what that would look like, or Walmart or Sam's or Costco or whatever, and see what that ordering would look like. Are you going to have this perfectly nailed down? No, but it's a good starting point to be like, all right, if I have to buy all this stuff every single month, which if you're really busy, you will, what's that going to cost me? And then here in H27, we've got that PITI pulling back over, right? Because I still have a mortgage on this property. And so what is my total cost? So I'm looking at just over $2,900 just to run this property and net zero. So at projected cash flow of 40%, I'm at negative, and at 60%, I'm still negative. But again, this is where you get to make that decision. Am I comfortable with this? Well, 40 and 60%, well, okay, well, maybe I'm only like that for 6 months or a year. Maybe I'm comfortable doing more, or maybe I can sleep more people in that house so I can charge more money. There's lots of puts and takes when it comes to short-term rentals, and I'm not going to get into all of that. But ultimately, at the end of the day, when you get to the projected cash flow numbers on your calculator or the projected profit on your calculator, you're the one to make the decision if you're comfortable with it. All I will say is, if you're looking at anything negative, please make sure you have reserves somewhere that you are okay with pulling on when needed, because this is not, an easy linear, like, just stroll through the park, right? There's lots of things that happen. And so it's really important to factor all of that in. So this is our calculator. And like, to me, that's the most important tool that I have. And so if I'm looking at this, I'm going to go back to Donald and say, all right, Donald, I think flipping it's our only option. Well, okay, so what, like, am I comfortable with one exit strategy? What do we think the market's doing? What is the data telling us? Donald sends his top 3 tips every month, right? So what does that look like? What is the market telling us that it's doing? Data is there and it's powerful, and Donald is top notch at pulling it together. And so you really can have a good conversation about, does this make sense for me to do or not? And am I comfortable or not? Because ultimately, at the end of the day, you're going to list that property and everything's going to be beautiful. And then you're going to be sitting on your hands going, okay, where are my offers, right? And you want to feel confident in that decision, even when things get a little bit nervous. So it's just really important that you get these numbers right and make that decision. And I just want to encourage you too, that it is okay to say, you know what, Donald, this house is not a fit for me. We got to move on and do the next one. Donald wants you to make a good decision. He wants you to have a successful property. He wants you to come back to him to buy and sell and rent and do all the things. And so he wants you to make sure that you're making a good choice. And so please do your due diligence, ask him questions, walk these houses, get quotes, put the numbers together, create a calculator that makes sense for you, and make sure that the decision that you are making is one that you feel good about, and one that on a good day you are proud of, and on a bad day you are still proud of, because you know that you did everything you could to make a good choice and to get started in real estate investing. So that's all I got for you.
Elizabeth, that is awesome. Man, there's so much more I know you could have said. You did a class on this for 2 hours one time. So to get it down to 30, 40 minutes is pretty impressive. So real quick, here's probably the question most people are asking. How can we get a copy of that spreadsheet? Because there's so many formulas probably in there. Do you have a way for people to get that spreadsheet?
I do. So we've actually included this spreadsheet on one of our websites that we've created, where we've got all kinds of tools, mostly geared towards short-term rentals. But we do have the link to that. So I can, it looks like Donald and Santa just put it in the chat. So y'all can get to the link there. If you have any questions or ever want to walk through it with me, there is also a video that should be in the download that you get that kind of helps explain some of this stuff. So yeah, the calculator is available.
And I've been through some of your resources. You talk about the type of furniture you should have in a short-term rental and everything. So that's awesome. I know Chris Bon and Xanath had a question. He's on his phone, so we couldn't get it in the chat. But maybe if you can read his question, to get a couple actually.
Yes. He says, "Hi, Elizabeth. This is Chris Bodden, and thank you and DT for this information. It is fantastic." He has 2 questions. His 2 questions are, based on your experience, how many months do you plan for carrying costs on a flip on average? And on a long-term rental, how do you plan to hold these properties before you sell and buy again?
Okay, so on the flip side, usually at least 4 months is that number that I put in the projected hold spot. It depends on how big the renovation is. You're probably looking at 2 to 3 months for a renovation, depending on how much you're doing. And then the rest of that hold cost is truly going to depend on days on market. So that's where I would encourage you to have a good conversation with Donald about how long are houses sitting for, and pricing in a position that's competitive. I mean, the last flip house that Donald listed for us, we went through all kinds of numbers, and he gave me a range of what he thought we could list in, and we decided to list just a little bit less than that. Not a lot, just a little bit, so we could kind of have that competitive edge so that we can move faster on the market than others. That's my choice. It's, our strategy. But it's an important one to consider. And again, that's where Donald's analysis is going to come into play. In regards to holding long-term, I truly don't have a rule about how long we hold properties. We did just sell one of our rental houses. It was one of our furthest away. The tenants moved out. We, did whatever we needed to do to kind of do the make ready in between that. And I listed it for rent and for sale. And I was like, you know what? I'm just going to see what happens. And it ended up selling. And so we priced it right for selling based on a couple things that the house needed. And then of course priced it right for rental, and just where the market was, we were ready. We were okay with the sale option, and so we sold it. So I don't have a rule for that. I know some people say 5 to 10 years because they want to capture that appreciation and stuff. Again, I think that would just depend on what your goals are with the long-term rentals.
We also have a question from Andrew Johnson. He's asking, do you recommend setting up an LLC before starting?
So before I answer that, I'm going to say I am not an attorney, but I did. We decided that we wanted to hold our properties in an LLC, and so we consulted with an attorney, decided on that structure, and that's what we did, and that's how we hold them. So that would be completely up to you. And I would definitely make sure that you consult with people, an attorney to make sure. But yes.
What's the major benefit to that? I know from a liability standpoint, there's protection, but and I guess one or two big reasons why you do an LLC.
It's for sure the liability, keep things separate from yourself personally. I would say it's probably the biggest. But then also as you grow, then it's a company, and you've got separation of church and state, if you will, right? So you've got everything that's business related over here, and then everything that's personal related over here. I like that. My brain works that way. And so I like that delineation of professional and personal. And so that's works.
And Chris Bonnet, he's one of our lenders that we use, and he was just chiming in. He goes, "You can do loans in the name of the LLC as well, if that's helpful. So not under your name. And of course, DSCR loans, you can get a loan not based off your income, but on the potential income of that property as well. So a lot of different things there.
Yes, it's amazing what tools are available now. Honestly,
Oh, I know. I know. Well, like Xander said, if anyone wants to unmute themselves, I know it's kind of getting close to 7:50. If y'all have to sign off, we totally understand that. But I had one more question while people are doing it. And Clayton and Haley, if y'all had something too, go ahead. But in a moment, if you could, Elizabeth, after anyone else has any questions, if you have like a story, you work with some people who are under some major distressed situations. Maybe the property is distressed. Maybe it's that homes become overburdened and it has a blessing for them. If you have a quick story you can share about how you've kind of stepped in and really helped somebody on that.
Sure, absolutely. Did Clayton and Haley, I think you said, did they have a question first? Do you want me to answer that first?
Yeah, go ahead, Clayton and Haley.
Oh yeah. Hi. Thank you, Elizabeth. This is Clayton here. So we were just kind of wondering is most of your portfolio single family homes? Is that what you go for mostly?
Yes.
Okay. So why has flipping been your go-to? Like, why does that work the best for you?
I don't know that I would say that flipping has worked the best for me. We do both. In this sample, the flip exit was, the one that popped up, but again, these were just made up numbers. So, but I think that there's lots of opportunity both ways. Certainly with a flip, you're done with it when you sell it, right? You buy it, you fix it up, you do the things, you call Donald and say, all right, we're going to list this thing, and you do all the paperwork with that, and then the buyer buys it and you're done and you move on to the next thing, right? There's certainly a benefit to that. But long-term rentals have their benefit also from a tax strategy. They have benefits, from income or from future, like being able to equity capture, like maybe you do a cash out refinance or you get a loan against it, or all kinds of different options that you can do by having those pieces of property with equity in them. So I think honestly, it just depends on what is a fit for you and what works. So when we evaluate a property, we're looking at all of the possible options. And part of the thing that helps us make a decision is, do we want to hold a property in this area? Can I manage this? Am I comfortable with these numbers? Do I think it would do better selling? There's so much nuance to these conversations, and so much of what we have with Donald in regards to, like, what do you think? What is the market telling us is happening here? And that helps us decide on which route to take.
Okay, cool. So if you had to say, like, the stress of being a landlord and dealing with tenants, versus the risk of a flip and exit?
Ooh.
Like, would you take one over the other?
It's a great question. I am not sure I can answer. They both are stressful. I will say if you're going to be a landlord, it's a couple things are important. One would be, you know, I'm always looking for handymen, electricians, plumbers, whatever. Like, I don't shy away from ever being introduced to one of them because you just never know when you're going to need somebody. And then when you need them, you need them. And if they're not available, you need backup, you know? So I have most of those people that I communicate with on text. So I can text my handyman and, hey, you know, this house, can you do this? Can you check this out? You know, whatever. So that's really helpful to remove some of that stress when things are needed. And then also, I believe when you're a landlord, like tenant communication is really important. So when our tenants pay their rent, I text them and I'm like, hey, thanks so much for sending rent. Do you need anything at the house? Because I also want to make sure sometimes people might say like, oh, I don't want to bother them or whatever. And it's like, please bother me. I want to take care of this house, you know? So there's risk to both. I mean, every time I list a property, especially for sale, I'm always scared. I'm always like, oh my gosh, is this going to work? You know, but I'm rooted in the numbers. So I'm confident that that's going to work. And then I also have, you know, some contingency money if it doesn't work. So I don't have a great answer for you, I guess, because I do both. So I think, you know, try one. Like, because honestly, if you bought a house and you decided to hold it, and then you were like, I really don't like being a landlord. Guess what? Hey, Donald, I want to sell this house now, you know? So you've got that option if you change your mind.
That's a great point. I think we'll just start out and try both. And then, yeah, if we have to sell out, we can do that.
Yep.
And Elizabeth, I had just one more question for us as well.
Sure.
And this is Haley, yeah. Kind of regarding the risk portion that you said, have you had any experience instead of kind of, you know, buying a home that needs more of like a flip and kind of those unknown costs that could come up when you are flipping a home? Have you tried buying kind of move-in ready homes and maybe doing upgrades and trying to sell a home from there? Because we just bought our first house and we'd like to sell or try and rent this house, of course, once we are able to move to something bigger. But do you think there's kind of the same investment value or benefit from doing something like that instead of like a flip where, you know, there could be more unknown costs that come along the way?
Sure. I mean, especially if you're already living in the house, I think that's fantastic. You know, you live there and then you're like, okay, we're ready to buy something else. You buy something else and maybe you do a couple things in your house. Maybe you know, change the counters out or paint it or, you know, like little things. And then you turn around and rent it. I mean, I think that's a fantastic idea. I would absolutely encourage you to do that.
Great. Thank you.
Thank you.
That's probably the best and easiest way to become a real estate investor is to do it with your own current home and find a way to buy your next home without and keep your current one, especially a new one like Clayton and Haley had. That's a perfect ideal rental property. I remember I was going to tell them that the day they bought the house, but they said it first, which just showed me how in tune with things they are. And so I think that's going to be their strategy. They got this stuff down and are soaking in like a sponge. They're awesome. So
That's awesome.
good questions. Good questions. Xana, did Satoya have one?
Yeah, Katoya also had a question. She asked, do you purchase investment properties for rental arbitrage use?
Okay, so if I understand your question, you're asking me, do I purchase the property and then let somebody else rental arbitrage?
Correct.
Okay, no. I've had people come, so rental arbitrage, for anybody that doesn't know, would be if you rented one of my houses and then you turned around and you made it an Airbnb. And so now you're managing the Airbnb, you're paying me rent. So I'm getting my year lease or whatever of rent, but then you're renting it as an Airbnb and furnishing it and stuff like that. People have done it with apartments too, although apartments are cracking down on that. So it's harder to do now, but I do not do that. I've had people come ask us before when we have a house for rent if we're willing to do it. And the answer is no. But there are certainly people out there that are fine with it. So you just have to kiss a lot of frogs and ask a lot of people if they're willing to do that kind of strategy.
Yeah, I was just asking. I know there's a lot of money out there in taking that approach. So just curious.
Yeah, absolutely.
I've never even heard of. Well, I mean, I've heard of that, but I've never seen anybody actually do that. That's you better be checking with your landlord if you're going to be doing that as a tenant. That's for sure.
Well, that's why I asked you. You have to get the permission of the owner to do that, and then as you become the tenant, but then what you do is you then can do your rooms for rent in there, and it's something that has been growing rapidly due to the affordability issues that's going on right now. So that's why
that's interesting. That's interesting. If there are no more questions, I don't want to stop anyone from asking a question, but maybe a good way to wrap up, Elizabeth, is maybe talking about a story real quick if you have one. I know we've done quite a few, but maybe someone where, hey, I just got to get out of this house. I have liens on it. I owe property taxes, and somewhere you stepped in and really helped them out.
Yeah. You know, people, all kinds of things happen in life, right? And that's why I'm so passionate about making sure you got a calculator right, because things happen and you want to make sure you're covered as best as you can. We recently actually helped a gentleman. It was really a sad situation. His sister, her house caught on fire and she passed away, and the entire house was a complete disaster. I mean, the whole house got burned, and he lived in North Carolina, and, you know, was like, what do I do? And in the middle of this, you know, with his sister passing away, now there's also going through probate. And so I knew his probate attorney. And so she recommended me to him, and we met and made an offer on his sister's house. And, you know, he was able to sell it and move forward. And so he was able to deal with insurance and then sell it to us, and he was able to be done. So, you know, we always just tell people that we like to be an option for them when they're considering selling their house in what we refer to as is, right? They don't have to do anything. They don't have to fix anything. They don't have to upgrade anything. They can just let us walk it. We make an offer. We, you know, agree on a price, and we are able to, they're able to move forward. So, it's a neat thing to do. It can be very emotional. But I enjoy being able to help these people move on from something that they kind of feel stuck in. So.
Yeah, that's great. And I've seen situations where you've done that, where the lady was in her hospital bed in the living room, and the house was an absolute wreck and owed back taxes on it and everything. And you came in and gave them a fair offer. That's the one thing I like about you is, yeah, you're looking at that calculator. You do have to buy it. You make your money on the buying side, as you taught me. So you do have to, you know, buy it right. But a lot of times that number is right for these people and what you've done. And boy, during COVID, you and I did a deal where I think the list price, we listed it at 460 or somewhere around there. And guys, what if you ever get a chance to see what she does to some of these homes, it is not the lipstick on the pig by any means. She does not cheap out. She goes all out with these, smartly, of course. And I remember we started getting offers, and I said, I had to tell her, you know, is it in the high 400s? I said, Elizabeth, we're not even talking about the same first digit anymore. We're not even in the 400s anymore. We're in the 500s and healthily into the 500s of what you've done. So your pricing strategy is something I always do. We never want to underprice a property necessarily, but we want to price it right or maybe slightly below, because I've seen with you that drives traffic into the home. And the more traffic we can drive, the more offers we can generate. And then we let the market do what it's going to do from there. And a lot of times it will be well above that list price. If we position it the right way and price it the right way, the market will respond versus overpricing it. I always say the market will tell you that too. You'll be end up sitting on the market for longer and selling for less than if you would have just priced it right from the get-go. And it's proven that time and time again.
You nailed it. You are 100% correct. It's a powerful pricing strategy, really, to do that kind of notch right under where, you know, it could be. And it really does drive the market, and the market's going to tell you everything. And Donald is fantastic at that. So I always feel happy to be like, here's my house, Donald. You know, you go do your job. I did my job. Tell me what to do, you know. And it works out really great. So that was a fun one. That was a very unique time to be flipping houses.
Oh, yeah. Yeah, it was. So, well, hey, Elizabeth, thank you again. You got a heart of gold. You just take all the time to do this. I just thank you so much. I know everyone else thanks you as well. This will be posted on YouTube later, so if you'll have more questions, comment on that as well. But thank you guys for all being here tonight, and we'll be doing more of these later in the future, perhaps. So be on the lookout for that. But thank you guys so much for joining in tonight.